Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to another edition of Zacks Top Stock Picks for the week. I am Brian Boland, and I am the aggressive growth stock strategist here at Zacks. And I'm going to give you my top stock for the pick, top stock pick for the week. Then I'm going to hand it over to Nina, who's got a great chip play. But let's get started here with Datto. You can see it on my screen here. It's MSP is the ticker for Datto, internet software name. It's a Zacks rank 3 with low value and growth scores and momentum. D's, all D's. Looks like my report card, to be honest with you. You know, I never really was one for getting good grades. Teachers didn't like me. They were jealous. That's what I used to say. They were jealous of something in my life. But let's go ahead and take a look at this stock and why I like it. Okay, so we're looking at the earnings history here. We have a nice beat. We've got a small beat and a nice beat and a nice beat. So as I look at those numbers, and I scribbled over them a little bit too much, but we got 5 cent and then 5 cent and then 5 cent. It's almost like it's, you know, five guys, but 5 cents. 5 cents seems to be the number. See, keep on beating it by 5 cents. So when you have that, you get a good size average beat. Now, why am I talking about that so much? Average beats and things like that. That's great. You know why? Because earnings are coming right up. They're coming right up here. They're coming out on Wednesday of this week. Look at this, 13 cents the whole time. It's just been sitting here at 13 cents when we know 5 cent, 5 cent, and 5 cent. You know, so interesting little tidbit there. Maybe we get an 18 cent number. That would be great. That would be a big beat. That would be really good. Here we see estimates moving the wrong way for next quarter. That's interesting. That's an interesting little thing there. But yet the number for the full year stays the same at 64 cents. And then actually coming in earnings contraction for this year, this calendar year. So that's a pretty interesting thing. Let's go ahead and take a look at one more thing here on this page. I'd like to take a look at this when it's here while we can. We look at the growth estimates. So this is really for last year. We're gonna grow around 18%, and we're expected to do just around the same thing. You don't really want to see that out of a growth stock. I'd like to see a little bit better numbers. Let's take a look at the valuation. So this is going to stop a lot of people in their tracks when they see 42 times earnings. And 7 times sales. That seems like an awful lot. But if we look, there was a 20% top line growth. So we're inching higher. We're pulling up, pulling away. And we've got a 2.3 times price to book. You know, growth and value investors like something under 3 times. And so while this isn't necessarily a value in terms of your earnings, your PE there, maybe in price to book it is. And you would, you know, it's interesting here because this is one of these asset slim businesses. Margins from 7.95 to 6.72, we don't like to see that. We like to see margins go up and better, but they're just not. So little bits of struggle, little bits of worry inside of an earnings beat story. Let's take a look at the chart here. So this is stock that's just a little over a year old. You know, popped out of the gate, came down, and then has been bouncing around. But here's the trend that I really want you to pay attention to. It's these earnings lines. You see these, how they go, whoa, yeah. Eventually, the market kind of starts to look at, you know, other than supply and demand of the stock, and then the lockup and stuff like that when there's these new stocks, start looking at like the real thing, and that's earnings. And earnings are what drives stocks more than anything. At least that's what we believe. You don't have to believe that, but if you're here at Zacks, that's the whole idea here. Fundamental analysis, looking at earnings estimate movement. So when we see nice moves like that, we know eventually a stock's going to run back up. Maybe that gets started now on Wednesday when this company reports. All right, so it's Datto, D-A-T-T-O is the name of the company. MSP is the ticker. And I'm going to hand it off now to Nina Mishra. She's going to talk about a semiconductor stock.
Thanks, Brian. I'm Nina Mishra, and my top pick today is Taiwan Semiconductor, ticker symbol TSM. So markets have been really volatile lately because markets don't like uncertainty. And currently, in addition to monetary policy uncertainty and economic uncertainty, there is this immense geopolitical uncertainty caused by Russian aggression against Ukraine. But this sell-off has created some buying opportunities for long-term focused investors and particularly high-quality companies which have unique competitive advantage in critical industries, high-growth industries. They are worth a look. And so Taiwan Semiconductor Manufacturing is the world's largest contract chip maker. It accounts for 90% of world's most advanced chips or semiconductors and more than half of the global semiconductor manufacturing revenue. So companies like Apple, Nvidia, AMD, they are among its major clients. Now we know that chips or semiconductors are now used in everything that is powered by software. So your computers, your smartphones, your cars, your electronics, your everything is powered by chips. So that is why the world has seen such a huge semiconductor shortage, and that has resulted in rising prices of chips. And whereas US is one of the biggest consumers of chips, only about 12% of chips are currently manufactured in the US. Most of the supply comes from outside, and TSMC is one of them. So now let's go to the code page on Zacks.com and take a look at some of the charts. So TSM is currently a Zacks rank number 2 buy ranked stock, and it has A for growth, though C for value and momentum, and a VGM score of B. Industry rank is very attractive, top 3%, 8 out of 248, because we know that chips have become critical to almost everything that we use. Now looking at the detailed estimates, you will see that the company reported excellent results. They have been surprising to the upside for the past many quarters. And after those results, analysts have raised their estimates significantly for the current year and next year. The company also announced that they are increasing their capital expenditure budget significantly. That would be 40 to 44 billion in the current year compared with 30 billion for the last year. And most of this expenditure would go in manufacturing of advanced chips. And the company continues to benefit a lot from the demand for its advanced chips, particularly in areas like smartphones, 5G, self-driving cars. So that is why these capital investments in those areas will continue to benefit the company. Now, the company is still trading at an attractive valuation. It has a forward PE multiple of about 21.9 currently, which is very reasonable considering the growth potential and expected EPS growth of almost 20%. This also has an attractive dividend yield, so that also makes the stock worth a look. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer, and we will see you next week.